the hall, this is Akshay Menon, analyst at PMS Bazaar. Along with me, we have Mr. Anil Rego, who is the esteemed investment professional, entrepreneur, and author. He founded Right Horizons Group in 2003 and currently holds a position of CIO at Right Horizons PMS and a fund manager for selected schemes. He is a CFA and MBA holder from ICFAI. Right Horizons manage AUM around or closer to 900 crores. So without any delay, let's have him for the quarterly update for the quarter 1 of 2023. Hello, sir.
Yeah, hi, Akshay.
So let me ask my first question. What was your overview for the previous quarter and how do you feel the market has responded? If you could elaborate on quarter earnings.
Yeah, India's listed corporate earnings were reasonably healthy for the last quarter of the previous fiscal, despite uncertainties in the global landscape. We also saw that incremental earnings were almost entirely driven by financials and auto, while metals ended up dragging. Banks, the numbers continued to be strong, driven by robust credit growth momentum, especially in the retail and SME segments, and recovery in the corporate loan segment. There were also stable margins, and we saw some bit of improvement in asset quality. Autos, on the other hand, volumes grew across segments on a year-on-year basis, and barring barring the two-wheelers, it remained relatively flat. Technology, on the other hand, the performance of IT companies was mixed. Mid-caps also ended up outperforming large caps with stronger revenue growth. So all in all, I think it's been a reasonably good quarter. Market scale new highs with earnings coming in healthier, and the bit of an improving macro indicators. Investor sentiment also improved. So I guess it's all pointing towards a bit of an optimistic outlook.
Thank you, sir. It is. And if you could elaborate on the investment philosophy and the process that's going to contribute to the performance of your funds. What is the secret mantra that you follow?
Yeah, so a key part of it has been our investment philosophy. We have the philosophy is about striving to deliver a superior risk-adjusted return. Okay, and we also have a robust risk management methodology and a structured investing process, right? And we also go through and do an in-depth fundamental and quantitative analysis, for which we have a bit of a framework. And I think putting that together, and working and delivering towards it is what has helped us, deliver performance. And the performance also has been pretty consistent, and I give a good reason of it for the process that we have. We also do have a bit of a framework where we say, okay, how do we look at identifying the future leaders, and which help us identify multi-baggers. And so there's a framework by which we sort of work there again to try and get good businesses at a price that we are comfortable with. And I think so this growth multi-bagger framework is something that helps us also to pick up some of those leaders, and where we're able to do that consistently is where we also see returns.
Okay, thank you, sir. And when you say about multi-bagger returns, I think that's a key thing for any investor who looks upon for a fund. Most of your funds, just like let me super value or perennial or flexi cap or the India business leader, most of them have given a better returns than the respective benchmark. So if you could explain like how they are different and how their approach from different from each of these strategies.
Yeah, like I just mentioned, right, our process and how we go about it, and the frameworks that we've developed have helped us be consistent in our performance. So just detailing that a little bit, we filter businesses with, solid fundamentals, right? And, from the whole universe, then we come down to a smaller set of stocks, right? Subsequently, we, scrutinize these for, all operating metrics. We have created a bit of a ranking methodology, based on which we, give scores to companies based on, various parameters and weightages that we've come up as part of this methodology. And finally, we have, valuation metrics in place. And like I said, growth at a price is something that we like to look at. So the last part of it is also looking at valuations and, where they go out of sync with what our views and expectations are, then we also look to exit them. But fundamentally, we also follow a bit of a bottoms-up approach of stock picking, where we look at various metrics which come into our screening criteria, and subsequently, we search for stocks which can also say either be turnaround stories, can be potential disruptors, and have good moats for their businesses, which sort of ensure that they are able to consistently deliver, on profit growth. So those sort of put together helps us, to come out with more consistency in returns. But yeah, I would give the process orientation as one of key drivers for the performance.
Yeah, actually, with your answer, I got to understand about the how a Right Horizons approach a stock for the selection into their portfolio. That was very clear. But if I could ask, what is the exit strategy Right Horizons follow to exit from a particular stock? Is there any particular exit strategy that you have, sir?
Yeah, actually, one of the methodologies that we have is what we call as the Right Horizons pendulum, and that is more to do with entry and exits. So like one said, when we enter itself, we look at what is the valuation and price, and based on that enter. And subsequently, if we find valuations skyrocket and go to levels that we are uncomfortable with, then that is something that we exit, even if we love the company, right? Because as part of a risk management as well, that's a practice that we've been following, and it has worked well. The number of companies where they are fantastic companies, they did very well, we exited, and subsequently they either stagnated or some of them even came down. So exits have been a bit of a strength on our side. The second point of exits that come in is when because we track every stock quarter by quarter, all the results, attend the calls or meet the companies, etc. And if we find there's inconsistency in what is being said, or we find some deterioration in performance or outlook, so various factors, we may also take a call, to exit the stock, or lower the weightage, depending on all of these. So again, exit also has a very clear process to it. Okay, and that is something which has helped us, because what happens is many times there's a temptation to get carried away with all the positive things that are going behind the stocks, right? So the process helps us stay away from it and take rational decisions.
Yeah, absolutely, sir. And if I could ask, if there is any notable investment decisions that were made in your strategies in recent or in previous quarter, and if you could throw some light on how the portfolio has, stand up for in spite the market was quite volatile. So, how did the portfolio stand up in volatility? If you could give some examples.
Yes. So, see, there are basically, a number of stocks. So for example, again, since you're talking about stocks, I also cover what are some of the actions that we took, say in the recent quarter, etc. Right? Because some of it is also, we look at it based on a slightly macro view and outlook there. And one of the areas that we focused on was moving over some bit of the weightage in strategies like flexi cap from large caps to small and mid caps, and that was based on our analysis, and we actually came out with a report as well, where and it was a contrarian view at that point of time, because there was a lot of volatility, around Silicon Valley Bank, and it is spreading on to Credit Suisse and Europe, etc. And India also, we had the Adani overhang. So we did say that we think markets will do well for this financial year, as well as a move towards small and mid caps. And there were various reasons, and where we analyzed, and data that we analyzed, which brought us to this conclusion. So based on that, we did move out of a number of large cap stocks, right, from Bharati, Airtel, Maruti, Sun Pharma, etc. Okay, and we ended up moving to small and mid caps. I don't want to name the sort of companies that we've bought in, but we've onboarded NBFCs, financial services companies, some bit on the retail side, specialty retail, okay, and newer themes that we think will drive the bull cycle and continuing performance for the period to come.
Okay, thank you. So that was a brief answer for the question that I asked. So if you were to compare Q1 of 2022 and Q1 of 2023, do you think which quarter performed well over Right Horizons?
Yeah, so not only for Right Horizons, I think for the market as well, the sectors, Q1 FY22 was, IT and metals were in the limelight. Okay, and they were showing strong growth, and they were moving up. There were misses some bit, from the financial services space, and private banks showed some slippage from the retail segment, and also NBFCs reported sort of below par earnings, as collections got a little impacted from the COVID type of situations. Okay, and also some bit of stress building up from segments across auto, capital goods, and telecom also. Results were impacted by the pandemic. So it was a bit of a not so easy quarter, but the tables turned over in the first quarter of this FY23, and so the corporate earnings growth was primarily led by banking, financial services, BFSI, rather the BFSI sector. Okay, and on the other hand, IT, pharma, and some of the cement sectors, etc., were impacted. Okay, so it was a bit of a turnaround in some of the sectors which did really well. Came back and did poorly as we sort of went forward. But yes, the BFSI sector has improved structurally. NPAs also are at a better place, and we're seeing that more sustainable, earnings growth coming from various segments, of theirs. So all in all, I think we think that Q1 2023, has been good, and probably setting up, for some better growth as we move forward.
Yeah, even the markets are all-time high now.
Yep.
And one more thing, that we are coming to the last part of the session. The last question is that what is your outlook on upcoming quarter earnings of 2023, and where do you see any changes expecting in the portfolio?
Yeah, so I think the things have stabilized a lot, and the domestic macro environment also is strong, and various indicators also are sort of indicating in that direction. Yes, there's been a bit of a cool off in key commodities, which has helped because it has moderated inflation. It'll probably see hopefully interest rates come down. Okay, of course, yields did take a bit of a breather out there. Okay, and so that would sort of be positive, for companies on the borrowing side, and to also, help spur growth. Growth in earnings, we think, will come from BFSI and auto, We think consumer and IT will also report, strong, healthy growth. While, metals and cement could be a little muted, even though, say, they are likely to improve from, the past quarters. The sectors based on domestic demand, we believe will, do better than, say, export-oriented segments. Okay. So we think the domestic economy, will do a lot better, and that makes us bullish on, say, building materials, autos and auto ancillary, banking sectors. Okay, and we believe they will continue to drive earnings growth, and possibly they could also outperform their peers. On the market cap side, I think small and mid caps will continue to do well relative to large caps in our view, and hopefully, like I said, interest rates could get cut as we go forward if inflation sort of continues to sort of be where it is, and we all in all we believe that we are or we like small and mid caps, and we are also overweight there, and we sort of looking to increase weight in financials and autos. Mid cap IT is another place that we like, and consumer and newer themes. So one believes that our portfolios are reasonably well positioned for the cycle that is coming up. And we had, as part of that, like I mentioned, we did proactively move our allocations toward mid caps in portfolios, which allowed us to do that, as well as we did reach out to clients and investors to say that maybe the mid and small caps are the places to be. And we believe that growth at a reasonable value, multi-bagger framework that we have will hopefully help capitalize and continue to deliver superior returns.
Thank you. So that was a very detailed answer, and thank you for your time. With that, we've come to the end of the session. I'm sure the insightful thoughts that you shared in this interview would help the investors know about the previous quarter happenings, and they can also easily focus on what's going to happen in next of 2023 as well. So you also gave a brief about 𝐸𝐻𝐻, how they're going to see about the investment philosophy for the next year, upcoming months. Thank you, sir. Thank you for that.
Yeah, thank you, Akshara. It was nice talking to you.
Thank you, sir.